Hello gang, and welcome to my first YouTube trading video on what I hope will be the first of many to come. My name is Romy and I'll be your maestro. I'm not a financial advisor and this isn't financial advice. I wanted to open up a new brokerage account so that I can track my monthly returns, my yearly returns using a platform I'm not that familiar with, Robinhood. I know that many of you might be familiar with Robinhood. I do trade on Robinhood, but this again will be a new brokerage account and I want to fully utilize this platform, which I haven't done before. And hopefully we can gain knowledge together, we can grow together, and we can track our weekly, monthly, and yearly returns by trading stocks. If you like this video, give it a thumbs up and don't forget to hit subscribe so you can be alerted to whenever I post. Also, I provided a link on the bottom so that you can avail yourselves to some free stock. It's a win-win situation by using my link. So what is a good amount to start with? So let me say this. A good amount to start with is any amount you are prepared to lose. Why do I say lose? Because stocks can do one of three things. They can go up, they can stay flat, or they can go down. We need to be prepared to lose every penny. I know that sounds a little disconcerting, but it needs to be said, and it's an honest statement. I've deposited $250 into this new Robinhood brokerage account. So naturally, you're going to have some questions like, well, what can you afford with $250? What's your maturation date? And what kind of profits do you expect to see at the end? Well, to start off, I'm going to have a mixed bag, a very diverse portfolio with my $250. And I think this is achievable and attainable using the Robinhood platform since we can trade fractional shares. So I can own big name companies like an Amazon or Berkshire Hathaway with $1 or $2 or $250. Also, I'm going to be trading small, medium, and large cap stocks. Why am I trading small cap stocks? Well, I'm expecting the beta to really impact that stock so we can see growth exponentially. So we're looking for that exponential growth. Unfortunately, as I said, stocks can go up, they can stay flat, or they can go down. So that exponential growth could also lead to exponential loss. I'm going to have medium and large cap stocks so that they can provide a level of safety and security for the market and for us and for our account naturally. They'll only see incremental growth. And we're okay with that because, again, there are safety stocks. I don't have a fixed maturation date. However, I do set percentage goals and dollar amount goals, and you should too. So let me cover losses. When is a good time to cut a losing trade? Always have a set percentage stop loss in place or set dollar amount stop loss in place, and always respect your stop losses. Also, your risk appetite isn't necessarily my risk appetite. I may cut a losing trade because it's hit my stop percentage, or I may re-enter a losing trade because it hasn't hit my stop percentage and I want to lower my cost basis. So without further ado, let's get into the first trade. Excited today because I finally got my brokerage account approved. I have $250 to just splurge on stocks. And I purchased 5 tickers today, so I'm going to run down the names and the tickers and explain the thought process behind them. So the first one up is BRK.A, and that's the ticker for Baker Hughes. I purchased 1 share. The next one is BRK.A, which is Berkshire Hathaway. I purchased some of that. Fractional shares, of course, because no one has $300,000 to buy one stock. The next one is Google. I also got a piece of Google, a fractional share. I got in for $25 and I plan to build on that and take it up to $50. The next one is T, and that's the ticker for AT&T. I bought 1 share, and I bought GPS, which is the ticker for Gap. I have 1 share of the Gap. So let me go down the list of trades and what was at the time real time. So you simply, if you're familiar with the Robinhood platform, you type in the ticker, it brings up the ticker, some chart, and you have the opportunity to buy some fractional shares or a specific dollar amount, or you can enter the value for the amount of shares you want. So I entered the amount, which was 1, and at the time it was $21.33. And the ticker again is GPS. The second one that I bought was T, and that's the ticker for AT&T. It was currently sitting at $29.88. I bought 1 share of T. The next one was Google. At the time, I purchased it under $1,800. Fractional share, I bought $25 worth. Another one was BRK.A. At the time, the price was fluctuating so much, I wanted to make sure that I didn't invest more than I needed to and be impacted by a loss so soon. So I bought half of my initial position of BRK.A, which was like $11. So BRK.A at the time was $21.94. And later on, I built on that position, paying another $10. So now I have 1 whole share of BRK.A. So why BRK.A? BRK.A is a complete reopening trade. They were hit just like many other stocks during the fall in March, the onset of the pandemic. So right now it's currently trading at $22.32. I'd like BRK.A to at least hit $23.32, $23.62, and then move up to its high of $25.64, where it was sitting before the pandemic. If it goes up $1, I'll be ecstatic. Making $1 off of my 20 is roughly 5% of my trade, right? Fantastic. You don't make 5% at the banks right now. What interest are they giving you? 0.001%. So that'd be fantastic, right? A 5% return. The second trade, Google. Who doesn't want a piece of Google? Google was stagnant at around the $1,400 to $1,200 to $1,500 level. It couldn't break that $1,500 level for anything. And last quarter, when they reported during ER, they actually shattered the estimates, the street's estimates. And now they're sitting at $1,800. I foresee Google going up to $2,000 in the next 2 months. And to boot, they'll have advertising dollars as well, because why? We have a new vaccine, so places will be reopening, so they'll want that advertising, right? What do you search when you go onto your computer? Google. And based off of algorithms, you're shown things that you may have spoken into your phone or in conversation, and boom, it pops up in your feed. These ads are algo driven, right? So I foresee Google going up to $2,000, and I want a piece of it. So right now I have $25 worth. I want to push that up to $50 worth, and in 2 months I'm going to just ride this up to whatever it's at, and then I'm going to take it out. So the next ticker is T, which stands for AT&T. They're currently sitting at $30.82. However, before the fall, the stock was trading at $39.37. So again, lots of stocks impacted by the pandemic. AT&T also pays a dividend. So for every share you own, they pay you 52 cents. And their next earnings date is January 27th. And I expect them to shatter earnings once again. But don't play this stock for the earnings. Just know the growth potential and that it was already clobbered during the pandemic, and we should see it go back up. The next ticker up is GPS, and that stands for the Gap. Now, the Gap has been dragged through the mud for a number of years, closing many of their brick and mortar stores. However, they have a new CEO at the helm, and she's looking to acclimate to her new surroundings and revive the Gap company's namesake. And I'm very excited about their growth potential now. They're really going hard at fixing their infrastructure and their online presence. And they have a partnership with Kanye. Imagine when they release the first pieces of clothing, shoes, what this is going to do to the stock. And people are going to be flocking to that site to purchase Kanye items. I see the Gap going up to $25 and then shattering that once they release Kanye items. And I'm wondering if they'll release them before Christmas time, because that would be the perfect stocking stuffer or a gift for anyone. They also pay a dividend of 24 cents per share. So I want you to slowly accumulate the Gap. But right now it's a buy. I bought, and I'll be adding to that position. Hopefully, who knows? I have like $100 left. And last but not least, Berkshire Hathaway. Now, I don't know if you guys are familiar with Papa Buffett, but that's who owns Berkshire Hathaway. He's a mega billionaire, okay? And I want it in. So, Berkshire Hathaway took a beating in March. And by a beating, I meant they went from $335,000 a share to $240,000 a share. That's incredible, right? Who pays that amount of money for anything, right? They don't even pay dividends, okay? So I've been looking at this and I was invested in it for quite some time because I saw the upside. I bought like $100 worth of it. And right now, Berkshire Hathaway is sitting at $342,000. I expect them to go up to at least $350,000. And I want a piece of it. If that's $5, $5 on my $50 investment is 10% gains. Okay, again, they don't pay that in the banks right now. They don't pay that in CDs, nothing. All right, so that'll be phenomenal for me. So that's all I have for today, folks. I hope you enjoyed the video. If you did, hit the thumbs up. Don't forget to hit subscribe so that you can be alerted whenever I post new videos. I will be alerting you as to the advances and hopefully no declines, or hopefully we can keep them to a minimum. Also, for new trades, I don't necessarily have to be involved, but this doesn't mean you can't take advantage of some new areas of growth or momentum, right? If you like the video, again, hit thumbs up. Don't forget to hit subscribe. Also, I provided a link below for free stocks, so take advantage of that. Until next time, they ask you why it's so easy. Tell them Romy taught you.